Hey everybody, Q here from Hyperstocks. Thank you so much for coming on board. In this video, I'm going to show you some strategies that you can apply to your own trading. For these strategies, I'm going to be using the following studies. These are going to be the 10, 20, 50, 100, and 200 day moving averages. I'm also going to have the VWAP, the RSI, and the MACD. But the main focus of the strategy is going to be the simple moving averages. Make sure you have all these moving averages applied on your chart. That way you can follow along and understand how I'm applying these strategies to my charts. So let's go ahead and get started. Out of the 4 strategies, or out of the 4 setups I'm going to show you today, 3 of them are winners, 1 of them is a loser, 2 of them are on SPY, and 2 of them are on Tesla. So these are really popular stocks that a lot of people are trading right now. There's a ton of volume, a ton of movement, so you're going to be able to apply these strategies to these stocks. However, you can apply them to any stock of your liking or your choice, as long as it follows the strategy guidelines. So let's go ahead and get started. For the first strategy, I'm going to talk about the first setup that I took today, which was at 6:46 a.m. This was a put on SPY, and it was entered at $2.75 or $275. Now keep in mind, this is California time, so it is 3 hours behind the East Coast or Wall Street. So this was entered at 6:46 a.m. Let's take a look at the chart and see what was happening at 6:46 a.m. So right off the bat, we knew that the market was going to be in a downtrend because the market reversed into a downtrend 2 days ago. So market was in an uptrend for a short term, and then 2 days ago it broke below the previous day's lows and it closed below them. So that now it is considered in a downtrend. Yesterday was a consolidation day, and then finally today we broke lower, only to reverse back up. But during the morning, we saw that the market came down and it broke below the pre-market lows. So these were the pre-market lows right here, and it broke below the 374.50 mark. After it broke below that mark, we already knew that the market is now getting weaker and weaker because of the fact that it's below its support. So knowing what we know and applying the moving averages, we have the blue and the purple lines here. These are the 10 and the 20 day moving averages. So notice the first thing we did in the morning was we flagged, and then we broke below those moving averages, and now we are using them as a resistance. We come up to it and we get rejected. We come up to it and we get rejected. So at 6:47 a.m., rather than chasing the downtrend down, we waited for a bounce, and at 6:47 a.m. or at 6:46, as soon as we got above the 10-day moving average, we entered a short setup, which was our put setup at 6:46 a.m. We entered it right over here and used a stop loss near high of day. So you can see that just a few minutes later, our price target was 372 to 372.50. A few minutes later, it kind of consolidated, and then finally it fell, broke the low of day, and it kept on falling to 372.50. Now, why did we choose 372 to 372.50 as our price target? That is because when we look back at this chart and we look back at its recent history, we see that the only untested support that we're going towards from this decline was going to be support made last week at 372. So 372 was a support, and we knew right below 372 from this double bottom was another support. Therefore, we have this range that's been untested. Therefore, we can expect the market to retest it if things went lower, and it did indeed, and you can see it hit 372.50 perfectly and then bounced back up. By that time, we were fully out of our puts, which was by 6:54 a.m., and its price target achieved by 7:14 a.m. So overall, a profitable setup, and that was a successful setup that we had. Now, the next setup we had was at 8:09 a.m. also on SPY. Unfortunately, this was a losing setup. However, let's see how it played out and why we played it the way it did. Now, when the market came down, we expected it to come down further. As any trader would, when we're in a downtrend, we're expecting the move to go back into a downtrend. But very early in the morning, around 8:09 a.m., we noticed that the stock market had started seeing a massive bounce. You notice that when we bounced, we moved back above the 10 and the 20-day moving averages. So this is a great lesson for you to learn when you're looking back and you're seeing that, hey, we're in a downtrend, but as soon as we got above them, now we were risking to be in an uptrend. But by this time, we were already out of our puts and we were ready for the next play. So the next play came at 8:09 a.m. Why did we send it at 8:09 a.m. is because right around that point, which was right here, we were about to face the high of day. So this was the high of day resistance at 377. So knowing that the market is generally in a downtrend, when we were facing such a strong resistance, our strategy here was, hey, we're going to take on puts, and if we break above high of day, then we're going to cut losses. So our stop loss was at 377.20. You can see that our entry 8:09 a.m. was right below high of day because we were expecting, again, puts, we were expecting the market to turn back down. but unfortunately it didn't do so. It broke above 377.20, facing our stop loss. But we got a little greedy and we held a little bit longer. We said official stop loss reached on this setup. Let's hold for a 378.20. Now, why did we do that? When we move out of the 1 minute chart and we go into the 5 minute chart, we see that the market's next resistance was this moving average right here. So this dark gray line is the 200-day moving average. So we said to ourselves, you know what, we'll hold a little bit longer. We'll see if it breaks high of day, but we'll still hold unless it breaks above that 200-day moving average, which was above 378.20, and it did, and we ended up closing and we cut losses on this put. Now, the next trade was a successful trade. This was a call on Tesla, and we chose same week expiration. So this is a high risk, high reward trade. Our price target was 687 to 690, and our stop loss was 673. We took this at 9:17 a.m. Let's see why we took it when we did and how we did on it. So at 9:17 a.m. we can see that Tesla is rushing, and this stock and this trade was taken right after the close. So notice we closed at 8:58 a.m. for stock, and we cut losses on our SPY put, which is the previous play, and then just 17 minutes later we switched sides. So we went from puts to calls, which is completely fine in a market like this, because today's market is a kangaroo market. We're all over the place. You don't want to be too stuck on the bulls or too stuck on the bears. You want to kind of jump around as markets go up and down. So the next trade came at 9:17 a.m. on a Tesla, and it was a call. So this time we're betting for the market to go up. We're betting for Tesla to go up. So why did we do this when we did? It was because when we noticed SPY right around 9:17 a.m. after it came down below that, remember our stop loss on the previous play was right here, right above the 200-day moving average. Right after we cut, the market dipped, and when we dipped, a lot of people thought that we would be moving back into a bearish territory. But right after the dip, notice we quickly saw buyers and we recovered right back above that point. So this was right around 9:15 that we closed our second candle, again back above the 200-day moving average. The second candle close was a confirmation that yes, we have kept this trend, and now if we hold above this line, then we are likely going to hold the bullish uptrend. So this is why we watch SPY and other stocks together. My eyes are always on SPY because the chart can give you overall market direction and momentum. If you're seeing stocks are following SPY, you should look at both charts to see which one is following the other and then take advantage of that time delay. So knowing that SPY was now back above the 5-minute charts, we loved that Tesla idea. We got into that call and we were confident that this call was going to hit. So we took on the very next day expiration, and we were able to get in at $144. This was entered at 9:17 a.m., which was right around this point. Let's take a look, which was right over here. As soon as we saw this candle move up, we took on the setup and we were able to capitalize. And notice our price target was 687 to 690. How did we get this price target? We used high of day. So the high of day was obviously going to be a point of resistance. It always is. Therefore, we use high of day as our price target, and we were able to cover profits at our price target of 687 to 690. Now our stop loss was 673. Why did we use 673 as our stop loss? It was simply because 673 was below the let me show you here on the 5-minute chart. 673 was below the 200-day moving average. So once again, we're switching just between the 1-minute and the 5-minute charts back and forth, and we're looking at these moving averages and we're seeing which ones we're using as a support. Obviously, when Tesla came back to the 200 here, it never broke. Therefore, we already know that it's keeping that as a support. So if we got into calls, we're safely holding calls as long as we maintain above that point and we don't sell off like we did towards the end of the day. But by that time, we were completely out of calls. We closed these calls, we took profits, we left one runner, and then once again, we took profits and we fully closed by 9:24 a.m. Now, the next trade was also another Tesla call. So we noticed that the market refused to come down. For the better half of the day, it refused to come down. It continued holding. So right around 10:29 a.m., we looked at the charts and we liked what we saw. Let's see why we took this setup on. This was at 10:29 a.m. This was right here, right when Tesla had moved back towards. So when Tesla dipped, we noticed that the dip didn't come down too low. Notice that the dip here maintained that 200-day moving average. So it never broke. Therefore, we know that there is enough buyers to suspend this price up at that point. So knowing that around about the 5-minute charts later on in the day around 10:29, when we saw a pullback, we saw the pullback, we saw the upside move, we saw the pullback from the 10 and the 20, which was a perfect entry for us, and our stop loss was at 677.50, which was just below this dip. So if Tesla had broken below this point, we would have gotten out. That was our stop loss point, just below that point. And our price target was once again high of day. So 685 to 688. And we used that. And then you can see Tesla right over here after our entry at 10:29 a.m. Again, 10:29 a.m. You guys can see the time here on the bottom of the chart. 10:29 a.m. We continued holding Tesla, and then we used high of day as our price target, 685 to 688, and we were able to close. You can see that price target achieved. Last call closed at 10:52 a.m., which was right here, right when we reached that high of day resistance. So thank you guys so much for joining, and I hope you guys enjoyed this video. I hope you guys learned a lot. There's a ton of opportunity in moving averages. Remember, when you're day trading, you want to focus on the 1 minute and the 5-minute charts, and you're going to primarily be using the studies that I showed you on this chart. If you guys liked what you saw, please give us a thumbs up and make sure you subscribe to the channel. It's highly appreciated. Have a great day.